Hey, welcome back to Analyze This. It's been a long time. I hope all of you are doing good. Today I was analyzing some IPOs and I thought of doing a video about how to analyze an IPO and how to apply for an IPO. Let me just get directly to the point. We have to take care of certain things before applying for an IPO. Some of them would be understand the previous revenues and the amount of profit they are making from that revenues, and at what rate the asset have grown within the company, the amount of debt the company is having, growth possibility, is the company a market leader or not. We have to understand if the company is having too much peers, or are they new to the market, or are they a new sector. So we have to understand these particular criteria to analyze the company better. Another one would be the infrastructure of the company. If the company is either let it be software based technological company, or a bank, or a pharmaceutical company, let it be anything. So we have to understand the infrastructure the company is having, if they need any manufacturing plants. Then what are the supporting markets, what are the major consumer base of this particular market, which all countries are the consumers of this particular company, and is it public sector company or is it a private sector company. One important factor would be promoter background. How much amount of actual stocks are being held by the original owner or the original promoter, and we have to understand the pre-market promoter holding and the post IPO promoter holding. So let me just give you a basic idea about what an IPO is. An IPO, or initial public offering, it is a thing which a company does when they want to go public to a stock market, either let it be NSE or BSE. So if they want to go public or they want to raise money for their future expansions, they'll go IPO. They list themselves in the stock market. There are two things mainly a company does. One thing will be offering of new shares, issuing of new shares, and the second thing they can do is sell the existing shares, or they can combine both and do an IPO. So we got an idea about what an IPO is. There are two different kinds of IPOs, two different price ranges. One is a fixed price IPO, in which the company will be issuing or listing in stock exchange with a fixed price. Another one is a price range, book price range. So the company will be allotting itself in that particular price range, and we have to bid a price in order to get the allotment in an IPO. So let me take an example to understand how to analyze an IPO. So today I'll be taking an example of Chronox Lab Sciences. IPO date is from June 3rd to June 5th, and it will be listing on 10th. This particular company is issuing an IPO in the price range of 129 to 136 rupees per share, and there are 110 shares, which means for a retail investor you need at least 15,000 rupees to invest in to get an allotment. That's the allotment price for this particular IPO, and they are selling their shares. They're selling the shares of 130.15 crores, and they are being listed both in BSE and in NSE. When we check our first criteria, which is previous year revenues, so the revenue has been growing from 2021 to 2023. They're having a pretty decent growth. In 2021 they had 63 crores of revenue, and in 2023 it's 97 crores. So they have a decent earnings of around 30-40%, and the assets are also being growing. So it's a good sign for a company to expand in future and to increase the profits in future. So in such a way that they'll get more money to expand their companies in future. The promoter holding of this company 99% pre-issue. Before issuing in the stock market, the company is currently having a 99% of promoter holding, and after issuing, the promoter holding will change to 74%. This particular percentage is a healthy sign if it's above 40%, because when it comes to having a board meeting in a company, it's important to have some authoritative power over 1 or 2 persons, so it's easy to take certain decisions. So 74% after post issue is a healthy sign for a company. When we talk about debt of this company, the company is only having 1 lakh of rupees debt in 2021. Then in 2022 they only had 64 lakhs of debt. which is significantly less compared to a profit making of the company. So it's a healthy sign of maintaining less debt. Another factor to be taken care is growth possibility. It's basically a lab science company with 20 plus countries under the consumer market. So they are having a pretty healthy and really good growth possibility in future, and it's majorly working on pharmaceutical and scientific research areas, R&D sector. It's having a really good growth possibility. When we look into peers of this particular company, there are different industry leading other companies too. One would be Tata Chemicals, Godrej Industries, Deepak Nitrite. But the industry PE is actually a bit vague, but still it's below 40. So it's a healthy sign to maintain an industry PE, and I think the company is also maintaining an industry PE. So it's a healthy sign in that case. When checking about the infrastructure of the company, they haven't mentioned any specific place for their infrastructure and manufacturing plants. Might be an issue, might not be an issue for some people who are actually, the people who are only actually focusing on the listing gains. It's not an issue. It might not be an issue for them, but for the investors, it's another story for another day. Another factor to be taken care of would be the rules and regulations. It's a specialty chemical market. So the rules and regulations of particular company for different countries will be so different. So they have to meet all these standards to maintain their reputation. Otherwise, it will be really bad for the company. That was some basic criteria to check how to analyze an IPO. I hope you got an idea. It's not a stock recommendation, but it's a just an example to analyze this particular IPO. Since the IPO listing is in a very low amount, 15,000 rupees, so there will be too much demand for that particular price range. So it's really hard to get the allotment of this particular IPO, but still, let's see how it goes. It's just an example. So thank you so much for watching. See you in next video.